A very good morning. Welcome to Power Breakfast. We are at the Mumbai News Centre. I'm Nigel D'Souza, and with me, Sonal Bhutra. Hey, Sonal. Good morning.
Good morning, Nigel.
Despite the weak handover that we saw overnight, Asian markets, they have rebounded today with gains, that we're seeing on the screen. The Nikkei is up close to around 0.5% odd. It's moved to the high point of the day. For the Nikkei, the very, very important factor is the dollar-yen. Now, that's holding above the level of around 111.5 odd. There's a weaker yen out there. That's good news for an export-oriented economy. And that explains why that market is the big outperformer today. The cost, we remember, in yesterday's trading session did end with a sharp cut towards the end of the trading session. Well, that, in fact, is, I don't know whether we're getting the live rate out there, because yesterday it ended with a cut of around 1.5%. The Taiwanese index, though, that's opened up with some green. And the SGX Nifty should come back up for you on the screen. We're kicking off a new series today, maybe some green, just to kickstart trade.
All right, then let's talk about the US markets, where the stocks finished lower after a sudden breakdown in denuclearization talks with North Korea that weighed on the sentiment. But better than expected fourth quarter GDP data helped to offset some of the selling pressure during the session. The Dow that fell 70 points at close, and S&P 500 and Nasdaq ended with cuts of 0.3%. CNBC's Deidre Bosa gets us a wrap of all the action on Wall Street.
U.S. stocks finishing lower, the Dow down 69 points, the S&P losing 7 and the Nasdaq falling 21 points. U.S. economic growth was better than expected as GDP rose 2.6% in the fourth quarter, according to the Commerce Department. A 2.8% rise in consumer spending helped spur that growth. Though this GDP report is only preliminary, this would mean 3.1% average growth for the previous year. National Economic Council Director Larry Kudlow telling CNBC that trade talks with the U.S. and China are, quote, going great, and noted the two countries made fantastic progress in the last week. During an interview with CNBC Squawk on the Street, Kudlow also said China has expressed willingness to make key structural changes to prevent intellectual property theft, which has been a highly contested issue in these negotiations. And Uber and Lyft drivers may be able to get in on the company's upcoming IPOs. Uber Technologies and Lyft are planning to give some long-serving and highly active drivers a cash award with the option to convert it to stock. That's the action from the U.S. market. Back over to you in Mumbai.
Okay, let's get in some opinion then on the U.S. economy coming in from some experts. Let's listen in.
A year ago, we saw dollar weaken temporarily, and then we had 9 months of very strong dollar. And again, we have started the year somewhat on the back foot with the Powell put, if you will. But at the same time, I think that when you look at economic surprise differential between the U.S. and Europe, or the outlook for monetary policy, U.S. versus Europe, it's very clear it favors the U.S. So from a flow of funds perspective, although we've started the year, very poor flow of funds to the U.S. markets, I think it's going to turn around. On the GDP data, however, I have some misgivings, and I fear that it might get revised down.
I'm not incredibly worried about the U.S. economy. Certainly the consumer spending numbers were quite good in Q4. That continued a pattern out of Q2 and Q3. I'd bet on us over most other countries over the next several years as well. I just think you want to calibrate what that bet you're making is. A lot of that is our demography is more favorable. We have no idea what's going to happen with productivity growth. I think it would be incredibly rash to take 50 years of productivity data or 10 years of productivity data, throw them out, and think we've written some brand new rule just because we passed one new law, changed one regulation.
National Economic Council Director Larry Kudlow has said that trade talks between the US and China are going great, noting that the two countries are making fantastic progress in meetings last week. This comes after US President Donald Trump decided to delay an increase in tariffs on Chinese goods, which were earlier scheduled to come into effect from March 1st. That is today. Hear out what experts have to say on the US-China trade deal going forward.
I would say the trade agreement is the more immediate goal for the United States, because at least one byproduct of the diplomacy in North Korea has been that the probability of conflict has been reduced. The atmosphere is much better. I think the administration can conduct diplomacy on North Korea on the side, but focus on the trade deal first in the weeks ahead.
I think that the Chinese and the U.S. side both want to reach agreement, but you have to sort of step back and look at what those issues mean for China's overall growth and development strategy. And if you're looking for China to sign an agreement that changes its economic model, that forces China to abandon its push for indigenous innovation and the growth aspirations they have between now and 2050, I think you're going to be disappointed. China is very committed to its strategic efforts to keep pushing ahead in its economy, the transitions that it's making. The core premise of China's strategy, I think, will survive this and most other efforts to unwind it from China's trading partners.
Okay, the European markets in yesterday's trading session, they ended mixed. The market watched out for cues coming in from developments surrounding Brexit, the US-China trade dispute, and Trump-Kim meeting, which ended abruptly as well. In reaction to that, you had the FTSE. That was down 0.5%, while the other couple of big heavyweights ended in the green.
Well, let's move on to the currency space. The dollar strengthens on better than expected Q4 GDP data, while safe haven yen weakens against the greenback.
Well, in the world of commodities, then crude oil prices hold steady on falling American oil stock piles and indications that the OPEC will not really slow down in its bid to drain the oversupply.
It was another volatile session with the benchmark indices ending near the day's low. The Nifty failed to hold on to the 10,800 mark, while the Sensex gave up over 200 points from the day's high. The broader markets, they outperformed the benchmark indices, with the mid-cap index ending the day to close to 0.5% higher. Manglam Malu joins us to get us all the market cues we need to watch out for trade today. Hi Manglam, morning.
Good morning guys. Like you said, the Nifty gave up the 10,800 mark in yesterday's trading session. At the same time, the Sensex too ended about 200 points off the highs. But yesterday's intraday sell-off, the street was bracing itself for some volatility coming in from the India-Pakistan border or some sort of de-escalation happening out there. But yesterday's intraday sell-off was on account of a surprise factor. The surprise factor was the abrupt ending of the Trump-Kim summit. Then the market stabilized a little bit. There was a bit of an intraday recovery, and then the expiry factor came in. The last hour volatility was on account of the Feb series expiry. In the Feb series, the Nifty's lost about 38.5 points. That's for the record books. But if you take a look at what took place during the series, 10,831 is where we started, 10,792 is where we ended. During the series, the volatility was fairly high, so you had a high of 11,118 and a low as 10,586 as well. Again, for record books, while the Feb series will end with a Nifty cut of close to around 0.36% and the mid-caps underperforming by about a thrice of that, a factor of 3, the mid-caps losing about 1%. In just the last 2 weeks, seems to be looking like the trend has changed a little bit, because if you take a look at it from Feb 15th, the week ending on Feb 15th, the Nifty is higher by 0.6%, while the mid-cap index is higher by 3.1%. So the mid-cap index or the mid-cap stocks have been outperforming in just the last 2 trading weeks. So that is an important point to keep an eye out on, given that when mid-caps do outperform, it sends that perhaps the frontline indices are some sort of support at the lower levels. In the last 2 weeks, or in the last week itself, we've seen the FII buying pump up. I'm not talking about Feb 22 where the Kotak deal happened, but if you just take a look at Feb 25, 26, 27, 28, even if it's the expiry, we saw a fair amount of FII buying in cash market. Feb 28, which is yesterday, the FII buying was 3,211 crores, not 10,792. That's the Nifty level that we're talking about. As we start the March series, the key cues. First one, rollovers have been low. So a lot of short positions have not been rolled over. 60.3% rollover. This compares with 3-month average of 69%. Nifty starts March series with lower open interest, 1.43 crores. This compares with the 3-month average of 1.94 crores. And the reason why I say shorts haven't rolled over is because long exposure by the FIs, that stands at 51%. This compares with 41% in the Feb series itself. GDP data below estimates, but that's a lag indicator. Keep an eye out on the lead indicator, which will be the March Feb auto sales numbers. Remember, yesterday auto stocks ended at the low point of the day.
Okay, all right. I think that's going to be a crucial factor in today's trading session. The auto sales numbers will start trickling in as well. But Manglam, tell us, you told us we'll be looking at the auto stocks. What more should we be looking at?
We start with the telecom stocks. Bharti Airtel announced a fundraise yesterday. So 32,000 crore rupees is what the company will be raising via funds. 25,000 of that would be equity. The other 7,000, which is $1 billion, would be perpetual bonds. But let's see how much that takes their debt off, given their debt as of December was 1.06 lakh crores. Will that be enough to pay for the remainder of their interest costs? Talking about auto stocks, let's talk about auto ancillaries as well. Motherson Sumi has been doing fairly well over the last few trading sessions. From the lows, it has gained about 18-19% in just the last few trading sessions. And now the announcement has come in for an acquisition of a company worth around 102 odd crores. This is very interesting because, you know, the company has been bought at less than a third of their total sales. So whether it's profit making, whether it's margin accretive, and what is the strategy behind this is something that the street will be watching out for. Mind you, Motherson Sumi has moved in just the last few trading sessions. From autos, we move on to planes. Jet Airways. Here, the stock was under pressure on account of 7 of the flights being grounded. Now we understand that additional 6 aircraft have been grounded as well. The other aviation stocks will also be in focus. A lot of them in the news. One, on account of the disruption that has taken place on account of the recent geopolitical issues. And secondly, jet fuel prices. They've been increased by 8.2%. An important input for them, perhaps the most important input for them. And that has increased by 8.2%. So all the aviation stocks will be in focus. And finally, Zydus Wellness. The promoters have pledged 6.3% stake in the company on Tuesday. Remember, Zydus Wellness is the one that bought Complan from Kraft Heinz.
All right, Mangalam, we'll be watching out for those stocks today, but now it's time for a break. Up next, GDP growth slows to 6.6% in Q3. More on that when we return.